Imagine waking up to the news that the United States government is officially stockpiling Bitcoin.
Today we're signing, this is very historic, an executive order establishing a strategic Bitcoin reserve and digital asset stockpile. This is like a digital Fort Knox for digital gold.
Well, that's exactly what's happening. President Trump recently signed an executive order establishing a strategic Bitcoin reserve, essentially a digital Fort Knox. This isn't just another cryptocurrency headline. This is a fundamental shift in how governments view digital assets, with implications that will ripple through the global economy for decades to come. While most people are caught up debating politics, the smartest entrepreneurs and investors are quietly positioning themselves ahead of what could be the greatest wealth transfer of the 21st century. Today, I'm breaking down what the Strategic Bitcoin Reserve actually means, why it matters to you, and how the professional Bitcoin mining landscape is evolving as a result. Let's understand what's actually happening with this Bitcoin reserve. The executive order establishes that the US government will maintain a strategic stockpile of Bitcoin, approximately 200,000 BTC that it already owns from seizures and forfeitures over the years. This is close to 1% of all the Bitcoin that will ever exist, and the order does several important things. It prevents the government from selling Bitcoin that it already has, authorizes exploring ways to acquire Bitcoin at no cost to taxpayers, and it creates a separate stockpile for other digital assets. It signals to the world that the US views Bitcoin as a strategic resource. Now think about what that means. The same government that maintains reserves of oil, gold, and even cheese is now treating Bitcoin as a critical national asset. This isn't the first time that governments have moved to secure Bitcoin. El Salvador made Bitcoin legal tender in 2021 and holds a growing Bitcoin stockpile of their own. But when the world's largest economy makes a move this significant, it fundamentally changes the game. To understand why this matters, we need to look at the bigger picture of money itself. Since 1913, the US dollar's lost over 98% of its purchasing power. What cost you $1 then would cost about $100 today. And Bitcoin, with its fixed supply of 21 million coins, offers an alternative, a form of money that can't be inflated or arbitrarily devalued. But there's another layer that most people miss. The true available supply of Bitcoin is actually much lower than 21 million. You see, blockchain analytics suggests that between 3 and 4 million Bitcoin are lost forever, including Satoshi Nakamoto's estimated 1 million BTC that haven't moved in over a decade. And with each Bitcoin halving, which occurs every 4 years approximately, this reduces the rate of new supply that gets issued up to that cap of 21 million coins. Today, we're mining about 150 Bitcoin per day globally, and that number will drop to 225 at the next halving. With institutional investors like BlackRock and Fidelity already accumulating Bitcoin through ETFs, sometimes to the tune of 10,000 coins per day, and now governments beginning to compete for the limited supply, we're witnessing the early stages of what could become a global race to secure Bitcoin. The game theory around this monumental move has only just begun. The Treasury Secretary and Commerce Secretary have been authorized to explore new ways to accumulate Bitcoin. And in fact, the language in that executive order itself says that they shall explore, meaning that not only are they authorized to, they're required to. What happens when other countries feel compelled to follow suit to avoid being left behind? The Strategic Reserve announcement signals a new phase for Bitcoin adoption, with several key implications. First, Bitcoin is gaining legitimacy at the highest levels of government. This provides regulatory clarity that so many institutions have been waiting for before getting in. Second, large-scale government acquisition could dramatically accelerate Bitcoin's scarcity. The mathematical constraints of Bitcoin's supply are running headlong into growing institutional and governmental demand. Third, as competition for existing Bitcoin increases, the value of Bitcoin production, mining, becomes increasingly strategic. Since if nobody's willing to sell you theirs, the only way that you'll be able to acquire it reliably and at a discount to the market price is through mining. You see, mining Bitcoin isn't just about generating your own Bitcoin. It's about securing these newly minted coins directly, without having to compete with institutions and governments on the open market. Professional Bitcoin mining operations are essentially manufacturing a strategic resource in limited supply. This is analogous to owning an oil well in the early 20th century when countries began establishing petroleum reserves. While the focus is often on Bitcoin's price, the real story is the emerging infrastructure being built around Bitcoin itself, and mining is at the heart of that infrastructure. As Bitcoin gains strategic importance, the mining landscape is evolving rapidly. Amateur mining operations, running equipment in garages or basements, are giving way to professional facilities with institutional standards for security, reliability, and performance. Professional mining operations differ from amateur setups in several key ways. First, they operate purpose-built facilities with enterprise-grade power infrastructure, advanced cooling systems, and military-level security. Second, they implement 24/7 monitoring systems with predictive maintenance to achieve optimal uptime and performance. And third, they're designed with significant tax advantages in mind, allowing entrepreneurs and investors to potentially offset their income through equipment depreciation. These professional operations are becoming critical infrastructure in the Bitcoin ecosystem, especially as the technical complexity of mining increases and the economics become more competitive. For entrepreneurs and high net worth individuals, professional mining operations offer a way to generate Bitcoin directly, rather than buying it on the open market, while also creating significant tax advantages through equipment depreciation. The Bitcoin mining industry is approaching what many consider a Goldilocks period. This will last until approximately 2026 because several factors are converging to create this unique window. First is that Bitcoin's mining reward halving cycle creates predictable changes in the economics, and after each halving, the cost to produce each Bitcoin essentially doubles, which has historically led to significant price appreciation. Second, the regulatory environment in the United States is becoming far more favorable for domestic Bitcoin mining, with states like Texas, Wyoming, and Georgia actively courting mining operations. And third, the energy sector is increasingly recognizing Bitcoin mining as a valuable tool for grid stabilization and monetizing stranded or excess energy resources. This convergence is creating an environment where professional mining operations can potentially generate significant returns while also providing valuable tax advantages. However, this window will not remain open indefinitely. As more institutional capital and potentially government resources enter the mining space, the barriers to entry will increase substantially. The entrepreneurs and investors who position themselves in professional mining operations now, before the next halving, and before all of the government competition intensifies, may find themselves with a significant advantage in the years ahead. The strategic Bitcoin reserve represents a pivotal moment in the evolution of Bitcoin from a speculative digital asset to a strategic resource that's recognized by the world's largest economy. For entrepreneurs and investors watching these developments, the implications are profound. Bitcoin is emerging as a strategic asset class that governments, institutions, and high net worth individuals are starting to compete to acquire much more rapidly. The mathematical scarcity of Bitcoin, combined with growing institutional adoption, creates a compelling case for long-term value appreciation. And professional Bitcoin mining provides a unique opportunity to generate this strategic asset directly while potentially creating significant tax advantages. As with any emerging asset class, education and professional guidance are essential. The Bitcoin mining industry is becoming increasingly sophisticated, with professional operations offering turnkey solutions for entrepreneurs who want exposure to mining without managing the technical complexity themselves. And whether you choose to buy Bitcoin directly, invest in mining operations, or diversify across multiple strategies, the key is to approach this space with a long-term perspective and a focus on quality over entry price. The strategic Bitcoin reserve is just the beginning of what promises to be a fascinating new chapter in the evolution of money. Those who understand the implications and position themselves thoughtfully stand to benefit most from this historic shift. Thanks for watching. If you found this information valuable, please hit the like button and subscribe for more insights into the evolving digital economy.